It's been a dismal start to the year for the markets. The S&P 500 down more than 8% year to date. And yep, it is only January. Check out some of these massive losses in names like Moderna, Netflix, Etsy, Nvidia, Twitter, and more. So we thought this might be a good time to go dumpster diving. One person's trash could be another's treasure. Our traders have each come up with one name that's looking so good. So bad it's good. I almost broke my own rule. Jeff, we tasked you with this, and you came up with not one, but 10 names. There's so much to die for these days.
Yeah, if that says anything about this market, I don't think it's a good thing. But I'll hit you with two really quick. One is really dumpster diving. The other one, not so much, just a little bit of a pullback in my view. But first is Nike. So I just like the price action there. It's down 20%. It largely filled that gap from last July. And I flagged 140 as a key level. I like the fact that it bounced off that. And I think most importantly about Nike, it has pricing power. And that's really critical in this market. And the other one, which is more kind of jaw-dropping just because of the price move, is Boston Beer. Sam, I think, is down somewhere near 70%. They had operational issues. They overestimated Truly. They overbought inventory. They had all sorts of issues. The stock got crushed. But I still think that they're in a good business. The craft beer market is growing. White Claw and Truly make up 70% of the hard seltzer market. And they're growing more quickly, and the valuation is better than a company like Constellation. Not to throw Constellation under the bus, but just to make the point that I do think Sam has some room to the upside here after such a big drawdown.
That's like a would you rather in there. Snuck right in there, Tim. But Constellation versus Sam, which would you take, Tim?
So you did ask me, and I am long Constellation, so easy answer. By the way, I know Jeff's a cool guy. We all know that. But the first hard seltzer I drink the next one I drink will be the first, and it will certainly be the last. And I think you have a dynamic here where I just think that the market overestimated the growth they were seeing in this segment. It's not what Jeff was saying, by the way. I don't think he likes the hard seltzers either. But I just,
there's anything wrong
we got
with
to a
it.
place with this stock.
Maybe I do.
Of course,
maybe
as
I do.
we like to say. With all due respect, as we also say. But I think it's a case where valuation on the stock is still expensive relative to the growth. Constellation has done some great spinoffs. They've consolidated, and they've actually grown market share in a segment that is under some pressure. So prefer Constellation.
All right. Karen, what's your pick?
My pick? Okay. Yeah. I don't even like calling it dumpster diving because I don't view it that way. It's a diamond in the dumpster, I guess, if you need to call it that. Mine is JP Morgan, right? So the stock is down from the peak, 14 or so %. It's not like it had a frothy multiple and things weren't going well so that they just, really hit it hard. And so it's the valuation here I really like. Of course, I like Jamie Dimon, but that's not really part of it. The other part is they're going to be buying back their own stock, plus they have a dividend. So I think right here, this is one that if I owned none, I would buy it right here, which I did.
I was going to say, and Jamie Dimon blew you a kiss on national TV. That's got to factor into it.
I've watched that 68 times, or 75 times. I don't know how many.
Maybe 175. Who's counting, though?
Probably.
Jeff Mills.
Okay.
Jeff Mills, do you like JP Morgan here?
Yeah, especially after the sell-off. I mean, we've talked about the bank trade a number of times, and for me, it's sort of a rent it, not own it for the entire year sort of situation. But I do feel like after the move lower, there's a lot of value there. Certainly a very quality name, and I think investors are going to continue to price in interest rate hikes until all of a sudden they don't. But until that actually happens, I think you're going to want to own the banks, and JP Morgan is as good as any.
Bonwin, what's your pick?
I think this lines up squarely in terms of buying high quality names in a sell-off, particularly when you've had a bit of a pullback. I think this is like 1.5 times price to book. So like previous employer, I definitely am a fan. In terms of my jewel at the bottom of the dumpster, I think I actually went to the landfill for this one. Is Zoom, and I expect to be in the minority here, but but after double topping at $400, I mean, this thing has been down and to the right to about 140, 150, and the knock around these names was that they weren't making money, they were expending cash, the valuation was inflated. None of these things are applicable to Zoom. I think here, I'm sure I got at least half of it right. I picked probably the dirtiest, dustiest name, and I think, all of the negative downside is priced in at this point.
Karen, do you think Bonwin just picked up a lump of, I don't know what you want to call it? Or do you like his pick?
I looked at Zoom recently and DocuSign, obviously those pandemic darlings. And I think, okay, it's a lot cheaper. It's not a super crazy price, but I come back to again and again the idea that the pendulum of valuation swings, and it doesn't stop at fair value, and it goes right past it. And I think that it will go right past Zoom also. So I wouldn't short it, that's for sure. But no, I wouldn't buy it.
All right. Tim, what is your pick?
It's Amazon. And again, if you think about darlings from COVID, and the fact of the matter is that the e-commerce world was only accelerated and punctuated, et cetera, and that they are so far ahead of everyone else with their AWS growth. And yet, if you look at this stock to where it was really just where it went up to in the early days of COVID. So I'm not even talking about where it settled in, but effectively, you've annualized it at about 13% in Amazon, even through this, after this 30% pullback. The stock's not expensive relative to itself. I think it's a company that has the ability to generate free cash flow when they want to. I'm still not sure I want that from Amazon right now. But look, this is the premier name. This is the premier internet name. It's the premier e-commerce name. It's many things, and it's obviously competing in cloud, and the same reason why I think we give Microsoft the benefit of the doubt. So Amazon for sure. And the multiple, I know in this environment is tough, but this is Amazon.